Welcome to this edition of Investment Insights. Today we have Paddy Brown with us. Hi Paddy.
Hello Tatiana.
What were the key developments and trends in the investment markets during the fourth quarter of 2024, particularly in relation to the outcomes of the US election?
The fourth quarter of 2024 was significantly influenced by the US election in November, which prompted cautious sentiment amongst investors due to the potential for considerable market volatility. Ultimately, the election resulted in a red sweep, with Donald Trump winning the presidential vote and his Republican Party taking the Senate and the House of Representatives. Despite initial volatility, US equities emerged as top performers, capping off an incredibly strong year. The remarkable performance of US equities in 2024 was driven by themes including the ongoing developments in the AI space, anticipated rate cuts, and a resilient economy that continued to defy expectations.
Now that the Republican administration took office in the US, what impact may this administration have on the investment markets globally and in New Zealand?
Since Trump's return to presidency, global markets have been unsettled by his aggressive tariff threats. These tariffs act as an additional tax on exporters, leading to price increases for consumers and negatively impacting business growth and investor sentiment. The situation also poses an inflation risk that could force the US Federal Reserve to halt rate cuts or even raise rates if inflation rises significantly, potentially strengthening the US dollar. Implications resulting from the proposed tariffs may worsen investor sentiment globally, hindering growth and creating headwinds for equity markets. In New Zealand, we are currently somewhat isolated from direct tariffs. However, we could see collateral damage if our major trading partners are targeted, or if tariffs are placed on entire product groups, as we have seen threatened with steel and aluminium imports into the US. New Zealand may benefit as trading partners seek to strengthen ties with other nations. Uncertainty is high, and the New Zealand share market would be affected by a global sell-off if sentiment turns bearish. Local exporters may gain from the continued strength of the US dollar, while importers and consumers will suffer due to higher import prices.
As we move into 2025, what key investment trends should investors keep in mind for the upcoming year?
Investors should be prepared for a potentially turbulent year, influenced by several key trends. First, Trump's announcements and policies will be crucial to monitor, as they could significantly impact market dynamics, regardless of whether they materialise or not. The ongoing development and application of AI will also be a major focus, evidenced by NVIDIA's record one-day drop linked to the Chinese-developed DeepSeek AI engine. We would expect to see further disruption in the sector as it grows. Associated with the AI boom is the exponential need for energy and power and data centres to store the servers. Additionally, it will be important to watch how Trump's stance affects sentiment in renewable energy versus traditional energy sources. Market concentration will be another one to watch. In 2024, market performance was heavily concentrated amongst a few stocks. And in 2025, it will be interesting to see if investors have a greater focus on fundamentals to explore opportunities beyond these dominant names. Lastly, central bank policies will remain front of mind for many investors. While the majority of developed market central banks set to continue their cutting cycles, it's unclear how Trump's policies will impact the decisions of the Fed and what potential spillover effects this may have in other countries.
Thank you, Paddy. And thank you for watching this edition of Investment Insights.